Again, thanks for being here today. So we're going to dive into how to identify and trade market tops and bottoms, trading tools, and the tactics that I use. So again, thanks for being here. I love these kind of Saturday events where markets are closed and, we can kind of kick back and, talk about the markets. And but what I'm going to really look at today is show you kind of a trading process that I use based on direction and the trading tools, and some of the kind of tactics and strategies that I go about using. So appreciate everybody being here, and let's get kicked off. But first off, a little background on myself. I've been, actively on my trading journey since the 80s, and got to start with a company called Coastal Corporation back in the early 80s, and was fortunate enough to get into. They had a training program where they actually take you in and teach you how to trade. At that time, it was crude oil and products and things like that. So it was a large integrated oil company with refineries, and we had a lot of supply situations that we would undertake. But I got into the program and spent about 3 months down at one of the refineries in Corpus, Texas, and kind of learned the process of putting oil in the refinery, putting out the products, gasoline, fuel oil, etc. Ended up in the kind of tanker part of the company, chartering ships and scheduling, doing things like that, the operational side, and then eventually got into the cargo trading side, and that's where the things really started to click for me. And went out for a couple of years. They sent me out to Singapore, where I traded products and fuel oil, crude oil, things like that. It was a fantastic experience. And then about the mid 80s, a company called Transworld Oil hired me, and spent about 17 years there, 16 years in Bermuda. But at that time, they were the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. So that's where things really kicked into gear. And so fantastic experience there. Bermuda was fabulous as far as the people and the island, but more so, all the experience in trading. So we were pretty much in all the different markets, heavy in the energy side, but also in the foreign exchange, all the different futures markets. And that's where I kind of started trading options back in the 80s as well. So kind of a quick overview of, my experience and my journey, and it's always never ending. We're always learning something each and every day. So hopefully I can pass on a few things here to everybody that's attending this webinar today. So the following presentation is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, again, trading really is a never-ending journey of learning to expand your trading knowledge and skills. And, what I've learned based on my 4-decade journey is that to become a better, more profitable trader, you really need to be able to read the charts, understand the technicals, and then manage your trading risk. Now, fundamental analysis is really important because it can lead us to some great companies with really good growth potential. But think about it, when it's all said and done, we really make our money on the stock price and not the company. Now, when a market uncertainty kind of clouds the fundamentals of a company can quickly become worthless. So at this point, it's really important that we look at other ways that we can, achieve success. So what I, want to look at is, you want to define what is making a successful trade, and then create the steps involved, and then have a trading discipline to follow these steps for each and every trade. So what I like to do is you go back and look at your, your winning trades, look at your losing trades, and pick apart the trades and see what, was making them work and what made them, not work, and then put that together in a trading process. So that's what I've done, and I've created this kind of systematic directional trading process that we're going to go over today. Now, step one is planning your trade. So this really comes down to, you need to have directional trading tools and the correct tactics to, be able to navigate the markets, because of all the uncertainty that we have from each and every day to weeks and into the months. So, here's a kind of 11-step guideline that I put together. Now, first we want to find the trade opportunities, and we're going to do that based on, what I like to do is look at the macro trends. Very important to look at seasonality, and then industry, specific. And then what I do is I scan a database of stocks and ETFs, looking for the kind of the best setups that we'll talk about. And then I, based on that data list of stocks and ETFs, then I look at the different chart patterns between the securities I'm looking at. And I like to look at kind of 5 selective high winning chart patterns is what I look for, and I'll show you what those are. Now then the next step is to validate the stock's relative strength. And to do this, I usually use momentum flows and relative strength of a specific security to the market sector it is in. And then 5, we want to evaluate the current market conditions, as far as the uncertainty. Now we're always going to have some kind of uncertainty in the market, but we want to kind of quantify that. Are we at a kind of low uncertainty, high or extreme uncertain kind of market environment? And then we can, adjust our trading based on that, as far as, the liquidity that we use, the risk profile, and, how we sharpen up and define our risk based on the extremes of the market. Now 6, then we want to establish our profit targets. So this is something that we want to do on each and every trade before we actually put the trade on. And I do this, and we'll talk about it a little bit later, using what I call price target mapping. So what this does is we will map out potential targets for our profit takes, upside or downside, based on a lot of different things like Fibonacci, moving averages, etc. And then 7, we want to establish our trigger points for stop loss. So this is also going to be something that we use with this price target mapping. We can develop, what I call lines in the sand, where we establish trigger points to, either stop the trade out or defend a trade, especially if we're using options. So that's 7, and then 8 is to establish those trigger points for your defense. Finally, 9, place the trade. 10, manage the trade, and 11, we want to monitor that trade for, all the way into its expiration and based on market conditions. So this is kind of a checklist, and it's really good if you kind of plan all your trades and have some systematic approach. And this is kind of the list I go through for each and every trade before it's ever placed. So that's the kind of the first thing. Now the next thing, you really, you can't trade blind. So to trade market cycles or swings, we need some kind of trading tools that can identify market cycle turning points. So remember, markets never go straight up or straight down. They're going to cycle and have kind of what I call rhythm to the market. Now, so what I do is I recommend, some kind of trading model, or using a system where the trading rules are based on a repeatable, successful trading process that's very clearly defined, making it easy for you to implement your trades. Now, a really great trading system is going to be one that you can adapt and use across all major asset classes on a short-term, intermediate, or long-term basis. So it should be kind of a dynamic system that you can use, for trading Forex or crude or stocks or ETFs, and also across any time frame. So it's really important you have that kind of dynamics within a system that you use. Now, to trade market cycles, in any market environment, what I did, I came up and I designed and used a rule-based system to highlight the intrinsic rhythm of the market. So it's kind of interesting. Every security, it could be Apple, it could be Google, Amazon, NVIDIA, it could be SPY, whatever, they all have kind of a little bit of a different rhythm to how they trade. So it's really important that you kind of get into that, kind of highlight that intrinsic rhythm. And to do this, I put together and used a trading system that I developed back in like 2009. I've been pretty much using it ever since. And this is the power cycle trading system and the indicators that allow me to kind of anticipate price activity rather than reacting to it. And it's based on using the 5 high winning probability chart patterns that we'll go over, a directional cycle timing model. So really obsessed with cycle timing, looking at the overbought, oversold conditions of a cycle, price range cycle extensions for, helping us on our profit targets and extension ranges that we can trade to. And then really a really big thing to highlight is momentum flow. So this is one of the most critical things as far as directional forecasting, is being able to use momentum to give you that forecast. Now, the next thing is to use what we call fractal timing, so breaking down on multiple different time frames. And then very important to use your moving averages, which I kind of refer to as automated trend lines, to track trend either up or down or breaks in trend. And then also we'll always incorporate Fibonacci support resistance levels for that target analysis. So these are kind of the steps that are kind of, involved in the system that I put together. Now, by combining all this together, it really then helps to provide a set guideline, which we can then use for, all of our trades. So whatever model that you're using, know the guidelines and the rules and stick to those rules and have a discipline about your trading. Very important to have that discipline. Now, the end result of using a trading system is that you're going to make your entry and your exit decisions based on the model that you're using and not your emotions of, potential fear or greed. And those are the two emotions that are going to sabotage your trading results. So a lot of times you'll find yourself maybe into that situation where you overtrade or you chase trades. So that's your emotions getting in the way of your trading. So you want to be disciplined and have a systematic approach to kind of help take that, your emotions out of your trading. So these are the first steps that you really need to kind of combine and put together. And, there are probably some other things that you'd like to do as well. Now, step 2 is the directional cycle timing tools that I use. Now, again, the kind of the key is what is referred to as the momentum. Now, trading in any type of market environment is really all about price direction, timing, and then managing your trading risk. So if you look at any trade that you've been doing, a successful trade, or even a one that's been a losing trade, you're going to probably see that your mistake or the thing that you did right, you got the direction right, your timing was good, and then you had good risk management. So these are the kind of 3 key things you need. Now, the best then trading tools then for signaling price direction and market timing that I've come up with and that I've been using for so many years is going to be based on momentum flows. And this is going to be using the momentum indicators that I use. And what these indicators do, they measure price strength or weakness. And when you're doing that across multiple time frames, this is what kind of creates that dynamic trend following indicator. Now, this indicator that I use kind of 2 different momentum indicators, but what it does, it's going to first help you to identify new price trends early, all right? Then it's going to help to validate the trend strength or weakness, and then that's going to help you then keep into the trade to maximize your profit. So if you feel comfortable about a trade based on the strength or potential momentum strength of it and very comfortable, then you're going to be able to stay with the trade longer to maximize those profits. So very important to have this kind of system that you can use. All right, so those are your momentum flows. Now the next thing, step 3, is your trading edge, and that really comes down to timing. Now by incorporating, multiple time frames, or sometimes we refer to that as fractal analysis, this is going to help to really give you better clarity to the overall trend of a certain stock or security. And this can be used for your swing trades or your day trades or very long-term trades. Now, the longer time frames, what I like to do is I use a longer time frame. It's kind of what I call the anchor time frame, and that's going to give you the bigger picture. So in order to get the idea of the general trend. So kind of the analogy, you're flying about 30,000 feet. You can see a lot of the different terrain, and then you might see something that looks interesting. Then we can kind of lower our altitude, diving down, and so that's kind of the idea. You want to use some kind of anchor trend, bigger time frame, and then what you want to do for entering that specific trade or trend is then you're going to use the shorter time frames, and you're going to use those to plot the actual trade entry into that general trend. So what you're going to want to do is you're going to have those lower time frames. They're going to be aligning with the general direction of the trend that you're looking at, the anchor trend. So that's going to then help you to stay with the trend strength or weakness in a market. Now, you're never going to get the whole picture of trend if you're just using one time frame. So again, it's important to use multiple time frames to make up into that kind of general trend to kind of get you, flowing in the right direction of a cycle. Now, step 4 is the high winning probability trades. Now, these are, over the years that I've been trading, I put together these kind of chart patterns that I look for to identify certain really good trade setups. So they're kind of basically 5 patterns that I've put together that I'm looking for the trades that I like to look at for setups. So we'll kind of review those real quick here. So the patterns really come down to 5 different kind of patterns, but the main one that I like to look for is what I call the volatility compression squeeze breakout pattern. Now this specific pattern then can be in these other 4 types of patterns. So the other ones that I've kind of identified and defined is the first one is what I call the cycle high reversal. So basically this is when you're going up, the market keeps trending higher and then finally runs out of gas, stalls and turns over. So cycle high reversal. So I'll show you how to identify those with the different tools that I use. But the next one is what we call the cycle low reversal. So this is where the market's been really getting tanked, sold off, and then it finally bottoms and turns up. Then we have the next one we call the cycle low retracement reversal. So this is where we retrace back to key maybe support moving average, fib level, then bounce off that. And then the other one is the cycle high retracement reversal. So this is when we're cycling up into a moving average and we stall and we pull back. So these are the kind of 4 patterns. And then when I identify maybe a volatility squeeze within these 4, that's where I really focus my attention on that specific pattern. The first one is, again, that volatility squeeze breakout. Now, the volatility compression squeeze pattern is identified as a period of price consolidation. It's where, your price is coiling in a very tight pattern, and then it has an explosive momentum type breakout that's either up or down. So it's coiling, and then it just really has a very fast explosive move, either up or down. Now, when you have a security, a stock, or ETF, whatever it is, or a futures contract, whatever you're trading, that has multiple time frames in a volatility squeeze, then the breakouts can be even more powerful with greater follow through, like a chain reaction explosion. I kind of call it like lightning in a bottle. If we can bottle that up and do it every trade, that's what we want to find. So it really creates this big explosive move. Now, this kind of chain reaction then is typically set off by one of your lower time frames. It could be start out with a 5-minute, that triggers a 30-minute to an hour to a 4-hour to the daily, and it becomes somewhat of kind of a tsunami tidal waves in some instances, where it just really tends to put that trend in motion either up or down. So then that sets off the volatility squeeze, and these different time frames ignite the next time frame up. And so these can create some very powerful price movement. Now, what this does, this kind of setup then is fantastic for your swing trades and really great for day trades, and offering you that big timing edge. So remember, in trading, time equals risk. So we want to be in trades and in and out of trades in a short period of time, so we can kind of avoid the risk that comes with too much time in a trade. So this is kind of what the pattern looks like in a kind of a simplistic form. So you can see this is actually a chart of Apple, and this is a 5-minute time frame, but it shows you the price is just kind of coiling here, very, very tight. Now, at some point, it's not going to go sideways forever. It's going to either break up or break down out of that pattern. So what we want to do then is the next thing is we want to forecast which direction. That's where we're going to use momentum. But you can see here on my trading indicators, coded in these dots here is where the squeeze starts. So when I see these dots show up, I know a volatility squeeze has started. And then I can get ready and prepared, and then when they end, that's when it's triggered. So these are, programmed into my trading indicators. So then what we're going to do, what I like to do is when it breaks either the high or low, that's when you jump in. And then we're going to use momentum to give us the forecast and potential direction of that break. All right, so it's relatively a simple process if you have the right tools. So here is a really good example of Netflix. And so you can see Netflix here has multiple different squeezes. So it's a really good teaching chart here. So you can see these dots here, these green dots right there on both sides. You can see how tight and coiled it is. So what happens, you can see my momentum indicator, cycle 1, lower study, this is a really fast momentum indicator, okay, very sensitive. And then I use cycle 2, which is a slower, to confirm that momentum. So you can see the histogram here. So it goes over 0. See it just building here, and then cycle 2 is also building there. Now, the first thing though to point out is I look for my cycle reversal indicator here, and that gives me alert to potential change in cycle. So you can see that purple arrow. So that's alerting me to be watching out. We're starting to get potentially a cycle reversal, and then the direction is being forecasted to the upside based on momentum. So then you can see it triggers, breaks to the upside, okay? Moves up, pulls back. You see momentum starting to fade, pulls back down, comes back into this area of support. Then we get another volatility squeeze. See all the dots there? The cycle reversal right here. Momentum cycle 1, 2, a break above that, a big push to the upside, a really big breakout there. Then a cycle reversal here. See the cycle reversal? Momentum starts to fade. Markets come back off, and then we get another volatility squeeze here, and momentum pointing to the upside, so another trigger on the upside there. So that's the combination of the tools used to help, kind of navigate through the volatility squeeze and to identify that volatility squeeze. Now here's one that we just recently did, and we actually just ended up taking some more profit on it Friday if you were in the room. So this was on Marvell, and this actually had a 4-hour squeeze with the daily squeeze. So this was back here on actually October 11th right there. So you can see the really tight pattern. So this volatility compression, see the tight pattern here. Okay, see the dots here? That's when it starts right there. So it's identified with the dots. Now, the dots are color coded. So when you see green, that's showing that the potential momentum is up. And I color code that based on cycle 1, okay? And so you can see it's just churning here. So this is the longer it kind of goes sideways, the more potential it has when it finally breaks. So then here's your upside high end range, low end range, and then we're looking, is it going to break up or is it going to break down? That's where the momentum comes in to give us their potential probability of forecast. So you can see the momentum start shifting up here first, cycle reversal right there, and then momentum shifts. So the probability is this is going to break up, and that's what it did. So it broke out here. Here's your 4-hour, broke out, and we had a great trade set up on that. So that's a really good example of what a volatility squeeze looks like. Okay, so that was Marvell. Now here's another one that we had. This was not too long ago. This was on Exxon. It had a really nice squeeze pattern. And this thing, you can see it was really consolidating for an extended period of time. I mean, it was back here, basically January it started and just churned January through March. See the dots here? So this is when it really started getting tight. All right, so then momentum starts shifting up, break of this key area of resistance, and off to the races it goes. So that was another great trade setup that we had not too long ago off of that vault. I wanted to go through that now. Getting back to the different chart patterns, the next one is the cycle high reversal. So this is currently QQQ. Now you can see here, this is and I'll show you, this is my extreme range bands, and we'll go through this indicator at the course. This is one of the tools that you're going to get. But here's just a good example of how this one works. Here's QQQ, and I'll just pull it up real quick. And this was on the weekly time frame. Hold on. 1 second here. All right, so you can see here this magenta color, that purple arrow, that's the reversal arrow that you're going to get when this pulls up. It's weird, my indicator's not popping up here. Let me move this over here. Yeah. Oh, here we go. So anyway, these are extreme range bands, and these are based on average true range, but this is a tool that I use for when the markets are, really been in a big, super major uptrend or downtrend. This is where we can start to see when they start to stall. So this is just a good example of, say, for QQQ, the NASDAQ 100. You see it got up here. This is what we call the 3 ATR, that blue line. And so what happens is you get, buying exhaustion sometimes, and then, you run out of buyers and the market gets exhausted, and that's where you start to get a pullback. So this tool is really good for kind of identifying these kind of market pattern situations. So currently, okay, here we go. So you can see right here, so we had a cycle reversal on the weekly down here, and this is the actual indicator. So you can see it crossing right there. So this gives that reversal arrow right there. So when you get up here, it's getting it's very overbought, 90 percentile. And then it's up here, it starts stalling out, running out of buyers, okay? And so then you can see it has kind of a reversion back. So you can see another example back here. Now, typically what happens, a lot of times when we get 3 in a row, the third one is where it really comes off. Now, the first one, typically I'll watch that close, and then we get a second one, you can start seeing it stalling. See, it just starts moving nowhere, and then it finally comes off. Here's another example. Reversal here, it comes off. Here's a reversal to the upside. Now, this is on the weekly time frame, which I call long term, but that's a really good example, and you can put whatever you want in here. You can see the same kind of measurements start to happen. So for example, I can put in, let's say we put in Google or Apple. This thing is really starting to run slow here. 1 second. They're doing some maintenance here today on Thinkorswim, so that's slowing it down. So for example, here's just another one, just to kind of see a real long-term Google. So here's Google. This is, again, there's your weekly, which I refer to as long-term. So you can see cycle reversal up and just fantastic trend up into that 3 ATR, and then finally starts to roll over right there. And so this is the alert to the potential market moving lower on Google. So you can see that reversal right there coming from extreme overbought. So you can see back here now 2 ATR is a normal move. So you can see here it comes to 2 ATR, pulls back, 2 ATR pulls back, 2 ATR pulls back, 2 ATR pulls back. Then it really rips to the upside and pulls down here. Now Google's starting to look pretty good, but it's got earnings coming up. So it's starting to try to bottom. So this is one I want to keep an eye on. So that's just a tool that I use, and that's to measure, look for cycle highs and cycle lows. Okay, so that's an example there. Here's an example of a cycle high reversal on the daily. So you can see the reversal indicator right there, that purple arrow, and then you can see momentum starts to shift down. And so then you can see the market really starts to come off. So here's momentum cycle 1, which is fast measurement of momentum. 2, okay, first we have the reversal here, and then we start getting the market pulling back and momentum coming off. And then you see it starts pull back down here and trends lower. So that's an example of a cycle high reversal on a daily time frame, which I refer to as the medium time frame. Now here's a cycle high retracement reversal. So here's where you go up and you hit into a major key, maybe moving average. So this was like SPY on a daily cycling up to the 200-day. So you can see here, this is a cycle high reversal, and it's coming into that 200-day, big overhead resistance. Now the first time to a 200-day, you're never usually going to go straight through it. You might pop through, but typically it tends to pull back. So that was a cycle high retracement reversal. So you can see it comes up here, get the reversal arrows right here, momentum starts to shift down, market starts to move lower. All right, so see that momentum? Okay, so very great way to forecast price. And until that momentum then shifts down or shifts back up, you stay away. So you can see here, cycle 2 is negative momentum all the way down here. So this is what you're going to be learning in the course, and plus you're going to get all these tools and indicators that you're seeing here on my charts. You're going to be getting all these tools, and then you're going to learn how to use them in the course. All right, so here's the XLK, which is the technology ETF. Here it is coming into that 200-day moving average. So this is a retracement reversal to the upside again. So you can see it coming up here, cycle reversal. So you're getting into that 200-day cycle reversal. And then that third one, look at momentum. Momentum starts shifting down, look at that. And then down she goes, hard down, all right? And stays down. Now, cycle 2 is really what I use, and you'll learn this in the course, is kind of the what we want to really look at, to make sure we're not going to jump in too soon. You might be tempted, after a big sell-off to take a shot to the upside, but with the way that I use my system, the cycle 2 here is going to keep you out until it starts turning green. That's going to then tell you, okay, it's starting to bottom, and then you can start taking your shots. All right, so that's but this will be more detailed in the course. Plus, you're going to get the tools to do that. Now, here's your cycle low reversal, and this is coming into market sold off here on SPX. You can see it broke below all the key moving averages. Just an extreme, really big sell-off. See how extreme? Those are my extreme range bands, and it's just trending down between the moving average and these extreme range bands, all the way down. And finally, you can see there's a cycle reversal here. So that's kind of step 1. Momentum 2, fast momentum shifts up. And then I'm looking for 2 to start to confirm right in here. You can see that. And then we get the market starting to turn up. All right, so this really helps you to, to navigate major sell-offs or, whatever to get back in. Here's just another example of a cycle low reversal. This was on Tesla. You can see how it was hard selling off here. See how it's hugging the extreme range bands all the way down, staying below the moving averages, just really, big trend down right here. And then finally, we get a cycle reversal right there, that purple arrow. And then we get momentum, green, shifting up. And then it stays sideways down here for, a number 4 or 5 days. And finally, cycle 2 starts to kick in, and there's the bottom. All right. And this orange arrow is my momentum crossover indicator that you're going to also learn how to use and set up in the course next Saturday. So really great directional trading tools that you can use. And again, these are what I've been using since 2010, basically. I started putting it together in 2009 and put some tweaks together with it, but pretty much the same system that I've been using for years. Here's just one more example. This was IBM cycle low reversal. Again, you can see just how these tools can really help you find the bottom. So here, IBM selling off, and then we get the cycle reversal here. Okay. Momentum 1 shifts up, green arrow, and then we finally get 2 confirming the momentum, that white arrow, and momentum crossover, and then up she goes. And it's very color-coded, very visual, very easy to follow. And here's a cycle low retracement reversal off a moving average. So here was a QQQ. You can see it coming into, that's that solid blue line is your 200 period moving average right here. So big support. So you can see it comes down here. Look at the arrows popping up, just kind of churning sideways. All right, so then we have that third arrow. Cycle 1 goes positive, then finally 2 goes positive here, and look, it starts turning. Okay, it gets up here to this area right through here and fails, but there's that kind of the turning point there. And here's just one more example. Here was Walmart, a major cycle sell-off, and then you can see where it ended up. So it came down here to that 200-day moving average right here. We get the cycle reversal, that purple arrow. Cycle 1 goes positive, 2 goes positive, up she goes. Here was another one right here. See the purple arrow, cycle reversal, momentum 2, up she goes. So here's just one more thing I wanted to point out. So here was this was back in 2008, 2007, 2008. If you were around then, you can remember the sell-off. It's pretty vicious, right? So this is a monthly, which I call macro time frame, but you can see here it started in 2007 right here and just got crushed, right? And so then here, look at the bottom of the market. So first, the same thing, cycle reversal, 2009. This is about January. See the arrow? Then cycle 1 goes positive right there, that green arrow. And then we get confirmation here. And then the upside trends, started to go intact there. Just kind of wanted to show that out. So whatever time frame, it could be macro, down to weekly, down to intraday, you can use. Now, the next really important part that I like to look at is seasonality. And, seasonal tendencies happen quite a bit. So, based on supply demand, various different factors create the seasonality for crude or whatever it might be. But currently, this is a really interesting data that I just pulled out. This came up, I saw this, and you can see that when we get in the next 6 months forward are the best for stocks. When we get to the 27th of October, so basically right now, you can see then going back here, the next 6 months tend to be the best months, okay? So here's going back to 1974. It's kind of hard to see because it's a pretty long data spreadsheet here, but I'll try to squeeze it in. But you can see on the average from 74 to currently where we are, 2023, 2024, actually, right here, the market has had an average move of 8.97% from October 27th into the next 6 months into May. All right, May 5th here to where they measure it. So you can see the different movements per year, but percent positive on average was 80% of the time. The biggest move was right here, 28.47. That was back in 75, and the worst was 8.89. Okay, but the point is that seasonality in this time frame is very, very strong. Now we've already had a big trend up, so maybe this year it doesn't happen, but a lot of the market obviously sees that, and so if there's any if anything's stable to the markets, the seasonality is just going to be additional support. So these are seasonality continuation charts that I use, and you can see here this is the December S&P contract, and so these charts you can see go back 5 years, 15, and 27 years. So you can see a tendency is for a cycle low around the 2nd of October right here. So that's the 5 year. You see here the 27 year and the 15. See the cycle low, and here's where we currently are right now. We're right there, right there. So the next kind of swing, we've got a pretty decent seasonal swing up here until about the early part of December. Then you get a little pullback, and then you kind of continuation on. But this is a very strong period of time seasonally for the markets. Now we've already had a big move, but seasonality is still there to be support to the market for that, and be aware of it. Okay, so here's the NASDAQ 100, same. Here's goes 5 years, 15, 28 years, and you can see here's where the cycle low is right about here. We're currently sitting right there. Okay, pretty much exactly like the S&P. And then I've got crude oil here, seasonally very, very weak time frame for seasonality of crude. Just to show you that, here's your February crude oil chart going back 5 years, 15, and 30 years. So you can see it tends to have a cycle high right around the 8th of October, and then just really looks pretty bad until about mid-December. Okay, so not much seasonality to or strength to crude, and if you think about it, the reason is because we're out of gasoline season. We're not into eating oil season, so it's a weak period of demand for the energy sector. So that's just a quick look there. Now the next thing is finding the trade. So if you have the trade setups, you know what you're looking for. The next really hard part is always to find the good trades, right? So that's one thing that's good about the alert service. I'm doing all the scanning, all the researching for you to find the good trades, and all you need to do is just wait for the alert to come out if you want it, and then jump on it. But this course will teach you then how I go about scanning and the tools I use for that, how I use the tools, and then also the indicators, how I use those. But so what I like to do is put the scanning process together to spot these breakout reversal trades before the herd jumps in, so we can get a head start. And so one thing that I like to use is what I call sector rotation. So this is I'll give this to everybody here today, but this sector rotation can show you from a daily time frame all the way up to 5 years, where the money is rotating into and out of. So you can see this was a Friday rotation over the last 5 days. You can see there was big rotation out of the market here, out of healthcare, industrial. So that was over the last 5 days. So the market right now is starting to see a little bit of de-risking, going into the elections. And we're currently, from a risk reward standpoint, not very attractive right here for, adding additional big upside positions, so it's not a really good time risk reward wise to be getting in. So the markets are starting to be a little bit reluctant and stretched to go into putting on additional risky go into risk assets and lever there, and also you're seeing more de-risking, people taking off positions, things like that. But you can see here year to date the big money rotation has been huge, right? But currently we're seeing that de-risking, so that tells you a lot about what the market's thinking about over the next week, and it makes sense with the election next week. Okay, so I wanted to point that out. Now the next thing I do is I've got a couple of tools that I use that I do for scanning, and this is where I find the trades. So I've got a scanner that I use to scan for the volatility squeeze And then I have another scanner that I use to scan for momentum reversals. But this is it shows you what the scanner looks like, kind of a matrix here. And it'll show you here, you can see that says SQD, so that means squeeze daily. And when I click on that, it'll pull up everything that's in a daily squeeze that I have, on my database that I'm looking at. And then it's color coded here. You can see it's in green, so that means that the momentum is positive. Now you see here, this CF Industries, it says 23, so that means it's been in a squeeze here for 23 bars, which will be 23 days. Here's MetLife, it's been in a squeeze for 23 days. Here's Walmart, just started a squeeze for 1 day. All right, so that's squeeze. And this squeeze indicator or scanner, you can use, the way you can set it up, once you have it, you can do it 1 minute all the way up to weekly or monthly. So that's what I use there. So this is my custom list. And then if you want to drill down, go into the S&P stocks or the NASDAQ stocks, you can do that there. So here's just a quick look here. Currently, this is kind of my current list of things that I follow, Qualcomm, et cetera, whatever it is. I've got a huge list that I'm constantly following here of the different stocks. If I want to see what's currently within this list that's in a daily squeeze, I just click on this, and then it pulls up, populates everything right here. So then you can see it, for example, Qualcomm, Skyworks, et cetera, and then it's color coded. So currently momentum's negative. Qualcomm's been in a squeeze for 25 days. If I want to see then anything that's triggered, I click here. It says triggered, TTD. That means triggered daily. And you can see Walmart just triggered to the upside, or you can see that XLV just triggered. If I want to go look for a 4-hour squeeze, I just click on that right here. And it'll show me everything in a 4-hour squeeze in the 4-hour time frame right there. And I could even go to weekly. This is weird. Okay, here's weekly. You can see everything in a weekly, XRT, et cetera. So then what I do with that is then I use that, I'll link it with my charts. And we can do some more screening here in a minute, but I wanted to quickly point that out. And then what I'll do is I'll pull up my charts that I like to use in my time frames and my indicators. And I'll link that with the squeeze indicator. So I've got it linked here. And a lot of times in the course, you'll learn how to do this, the time frames I like, but here's a quick, we can kind of do a quick overview here of anything in a daily squeeze. So what I'm going to do here is I'm going to pull this up, click this on daily squeeze. All right, so you can see everything is populated. And then what I'll do is I'll click through these, and this is where I come up with the trade. So for example, here's Qualcomm. All right, so pretty whippy, nothing jumping out at me to do there. Here's Skyworks, so just kind of flip through real quick here to show you a few. Here's one, and of course you have to then factor in earnings, but we've got earnings next week too that makes a big impact on these. But here's one to keep an eye on. This is Las Vegas LVS. Now it's already had its earnings, and it got a pretty good pop off that, but it's starting to develop a daily squeeze here, and so this might be one to take a look at next week. Another one that popped up on the radar here is XLC, which is the communication ETF. Let me pull that up. This is one to kind of track right here. It's in a squeeze. Here's communication sector. This will be Netflix, et cetera. So it's starting to develop a good daily squeeze, a 4-hour squeeze. You've got momentum here is neutral. Cycle 1 is down, 2 is up. So it doesn't know which direction it wants to go quite yet, but this is one that we'll start monitoring. And then another one that popped up on the radar is consumer discretionary XLY. Not a whole lot though popping up because you do have kind of the de-risking right now. But this one actually looks pretty good. This is consumer discretionary, starting to get a really tight squeeze there. Okay, so that's what we can do on the scanner, and then I'll show you the other kind of things that we can do. So with the scanner, then if I want to look at other things, I can just go here and I can go to and come down here to public. Let's say we wanted to see NASDAQ 100 or something, and then I'll go over here, click all the way down here. Here's the NASDAQ 100. That'll pull up all those stocks. I click on the scanner here, and it shows me everything in the NASDAQ 100 in a squeeze, and I can start, diving in to look at those, or maybe I want to look at the S&P stock. So typically what I'll do is go to the S&P 100 because if you get too much data, it bogs it down. So I'll usually like go to the S&P 100, and then I can see, anything in a squeeze there that I maybe want to look at. Here's like Starbucks, just gives you a really great list to work with. And so we'll be going over this in the course, how to use that. Now, here's step 6 is the breakout reversal. So here's some trades, and I'll go through these trades. These were alert trades, but I'll show you the chart pattern and then what we did with these trades. But these are the trades that, I pulled these together from the volatility scanner or the momentum scanner, and then using their indicators, send out the setups. So again, just going back through, what we've done since inception of this, you can see with the alert service, through Friday, we've had 794 trades closed out, 572 winners, 52 break even, 170 losers. We're on a high winning probability, and so these are unaudited, but just a summary of win-loss. Okay, so just to point that out. Now, here are a couple of trades to show you what they look like. Now, this is one that we did, we set this up last week, but we actually still, if you were still in it yesterday, which you could have been, this was on Marvell. So this was, what the alerts using. This is Telegram, which is the service I use to send these out. But you can see here, it says Marvell long, and this was yesterday, it was trading at 83.09. So it says, if long, the adjusted 25 October 77 call is short 25 October 85. So call debit spread. We adjusted this into, it said, take profit on any long balance today. Trade expires today. At this point, it was currently up $480 per spread, or 417% return. And then later in the day, I sent out one more, update. It was at trade at 83.22. And at that point, the trade was up $515 per spread, or 447% return. All right, so these are just kind of the things that, you can get with the alert service, but the other part of it is these are the trade setups that are based on the trading indicators and also the scanner for finding these trades. So just a kind of quick glance through it, this trade was actually started, we set this up on the 11th of October. All right, it was traded at 73.65. I'll show you the chart trade setup that we did, and then it had some adjustments here. I won't go through everything. And we adjusted it on the 15th, and the 18th adjusted it to the call debit spread. And then yesterday was the exit if you were still in it there. All right, so we had profit exits on the 14th, 15th, and 25th. But here is the trade. So let me get rid of the my pointer here. All right, so here was in a volatility squeeze. Okay, so this was a really nice trade setup based on a volatility squeeze. One second here. And look at this. So this was a retracement reversal off of look at all the moving average support. So here's your 200-day moving average in blue. You had 150, 100-day, and you had the 50. So huge support right through here. So look at this consolidation. This is Marvell. So this thing had been going sideways basically since, September. All right, see the dots? So in a squeeze, really tight, really tight. Now look at momentum. It had been just going up and down, up and down, up and down. All right, so no breakout at all. So big support here, but no breakout to the upside. So we got into the trade right here. Look, and this is the tools and the indicators told us what to do here based on the momentum. All right, so this is what we're gonna cover in the course. So first off, we had the cycle reversal right there, right in here, right there, and then we had momentum cycle 1 positive, 2 finally confirms that. So we went long right here on the 11th, and we went long on the break of that channel, that horizontal channel. Okay, so we got long right there, right before the break. And then we did a exit there, and then yesterday here. Okay, so that was a chart setup. This trade was identified using the volatility scanner, so that popped it up. All right, so got it from the scanner, and then the tools told us, when to get in based on the indicator's momentum and which direction to go, and that's how that trade worked out. Now, with this trade, what we ended up doing, we set this one up with a long call counter diagonal. So that was the original trade that we did on the 11th when it's traded at 73.65. So then we did an adjustment on the 14th, and now we were long the 25 October 73 call, and then we had shorted the 18 October 81. So we had this call spread that 73.81 using a calendar, so different time frames. So this was an alert trade, and you can see then we had a profit take on the 15th. The next day, it was trading at 82.02, and you can see the spread had gone from the original entry was 395 on the spread, and now that spread had blown to 692, so it's up $297 per spread, so 75% return. Now, the thing we did with this, what I'm always trying to do is adjust these into, lower risk, or sometimes we get into free trade. So this one, we really lowered the risk. And so we adjusted this into a call debit spread. So this was adjusted then on the 18th. It was trading out at 79.85. So adjusted this to rolled up the whole spread. So now we went long, we were adjusted the spread up to be in long the 77 call, short the 85 call, now all in the same October 25 time frame. So we now had a $8 wide spread on. Our risk was $1.15. Based on the adjustment, we had a lot of profit that we were able to absorb. So we reduced our cost down to $1.15, $8 wide spread. So $800 lesser cost of the trade. Potential for this to make $685 per spread, that'd be a 595% return. So that's what it was adjusted into from the original trade. And then yesterday sent out that profit take alert to take profit on any trade balance that you might have. So here was the adjusted trade there. And then you can see it was trading here yesterday on the 25th, 83.31 at that point in time. This was up, trading right there. This was up from $1.15. Spread entry, adjusted spread entry, now it was at 631, so it was up $516 per spread, or 448% return. All right, so that was off that retracement, cycle low retracement to the upside with the volatility squeeze. So that was the basic setup on that trade. So retracement reversal with the volatility squeeze. Now here's another one. Here's another idea. This was on Amazon. So this one we did a long trade. Yeah, this was also picked up with the scanner, and then the indicators told us what to do on the trade, and that's what you're going to be learning next Saturday. So this was when we set up on the 11th of September. It was trading at 181.30, and then we had profit take on the 20th when it was trading up at 189.97. So this trade was also another really nice trade setup on a cycle low retracement as well. So it's trading at 181.30. And I won't go through all the detail, but I'll show you kind of where we ended up. So we ended up doing this condor. So along the 182.5, 185, 192.5, 195, and at around $85. Okay, so then, and then it was right here on the 20th. It was trading at 190.16. So, that's where we got out. So let's take a look at the trade, and I'll show you what it looked like. So going into the trade, here was the trade setup. We had here again, here's that cycle low retracement reversal. This is one of my favorites off that big 200-day. So see this 200-day moving average right there? So you can see it was just churning on top of that for a couple of months, right? Now then we had the cycle reversal here. So this was, what we were looking at, okay? So spotted this with the scanner and then saw the reversal, momentum reversal right there, that orange arrow, cycle one positive, and then boom, went long right there, right there. We had a breakout and we were targeting this Fibonacci level right there, 190. So we set that up with a call condor to make it real cheap, to make low risk trade. So I like to make as low risk trades all the time. So this was the trade setup on this one based off that cycle low retracement reversal off the 200. So went long the 182.5, 185 called debit spread, and then sold against it the 195, 197.5. Okay, so we had this, what we call condor. All right, so we had the total risk of $96 right there. So we're long the 182, 185, short the 195, 197, and boom, our risk is total 96 bucks. So potential to make $250 wide spread, less our costs or risk, 154 bucks. Potential return would be 160% if it goes out inside our condor right there. And this one actually did. So here was the trade where it went out right there. It was, well, what the heck here? Oh, let's see. So it went out right there at 189.97. So this went from 96, our spread entry cost. Now the spread blew out to 250 right here. So here's our return. So we had $154 per spread or 160% return on that trade going out right there. So, you know, just kind of want to point out the setups and then, you know, how they were brought about, and then, you know, where we went with the trade. So that was a look there. Now, these are a couple others, and then we'll kind of move on and take some questions, but these are two that we did. These were some, I wanted to put this out because I sent out the email yesterday talking about this return, but these were some really cool trades. These are what we call the lotto trades, and this is one that we had on Tesla. This one was back in February, but we set this one up looking to target $200. So this was an alert trade. And also I'll show you the sharp pattern, everything, the reasons that we set it up. But this was doing a butterfly to target the 200 target that we're looking at right here. So we ended up doing this butterfly right here, 197.5, 200, 202 for $12. Okay, that's why it's so cheap. And so this ended up making over about a 1,700% return, you know, at expiration. So this was an alert trade, and here was the chart set up right here. So you can see it too, again, was churning sideways here, and then we started getting momentum, cycle reversal here, momentum starting to shift, and we were looking just for this move to the 50% retracement area, that 200, and so this was the trade that we did. So we did this butterfly trade where we're long the 197.5, 200, 200, 202, butterfly right there, $2.50 wide for $12, 12 cents. That was the total risk on the trade. Had a potential, you know, if it went out right there at the top of the tent to make over 1,900% return. And this is one of the few that I've ever seen. This one did pin at that level. But what, you know, we scale out. You don't stay in for the whole trade, but it actually did pin right there at expiration. So at that point, the spread went from $12. Now it was at $250. So this was up $238, 1,983% return. And here's one more that we did. This one was just recently. We did this one on the August timeframe. So this was on GLD, the gold ETF. So it was trading at 222.85, and we did another trade setup targeting a 230 pin on this. So this one worked out pretty good, not quite as good as Tesla, but very close. So here's the chart setup on that one. If I can get this to turn. So here we were, and again, here's a cycle low retracement reversal off of the 50 simple. See that right there? All right, so these are the patterns. This is one of the patterns that we've been trading a lot of in this up market. We've had big moves up, and then when it consolidates back down to a moving average, retraces, then we're looking for that move back up, okay, the cycle back. So here's the cycle reversal here, right there. And then we start getting momentum starting to shift, okay? So we went ahead and got into this trade, and then we were targeting this 230 strike right there. So we did this with a butterfly as well. So targeting that 230. So we had the 227, 230, 230, 233. So $3 wide butterfly, okay, $300 wide. Our cost on this trade was 29. We originally had this trade, we were targeting 225 and adjusted it to the 230. But we had a total risk of $29 and potential for $271 per spread or 934% return if it went out exactly there. Now it went out right there, so we still had a really good return and on super low risk. So here's the return. So this ended up going out right there at 230.47 at expiration. So it went from 29 to 232. And so we were up $203 per spread or 700% return. All right. So these were cycle low retracement reversals. And, those were some of the kind of trade setups that I'm constantly looking for. So that's kind of wanted to go over that. Now, if you'd like to learn more on how to capitalize on directional market cycles, here's what we've got. All right, so what you're going to get here is, let me get something better here. Let's do, whatever. Let's do Google. Google's starting to look actually, if it didn't have earnings, we would just be jumping all over Google. All right, so here you see Google. See, it's got a volatility squeeze. So the core model, you're going to get the extreme range bands. These bands here, color coded for slope. Okay, see the dots? Okay, that's the volatility squeeze. In the course, you'll learn how this all works. So it's got a volatility squeeze. Then you're going to get cycle lower study 1 and lower study 2. These are the momentum indicators. These are part of the core model, which is 597. But today, if you do the whole thing, you're going to get 337. You're going to get the cycle reversal indicator, which is the one down here. See this right here? See the cycle reversal right there? And I'm going to, in the course though, then I'm going to teach you how to use the indicators, how that I use the process, the steps I take for longs and shorts. They're black and white. They're 5 steps. All right, so basically just going through this trade here, you can see Google sold off. You'll get all the moving averages. I've got the certain moving averages. I've got support resistance. See it's hard to see here, but there's a dashed green line right there. That's the prior week's high. You've got the prior week's close and low. I'll show you that in a minute. So you're going to get everything, my support resistance package, and then momentum. So here's your cycle reversal right here. Momentum cycle 1 is turning up. Here's the green arrow there. Cycle 2 is turning up. Here's the yellow arrow there. And then you're going to get my momentum reversal indicator right there, that orange. I'll show you that one. We'll go in the course. We'll set that up, show you how that's used. And then up she goes. Okay, so those are the core indicators. It's basically 5 study set model. Let's do one more thing here. Let me put this to, and then I'll show you the time frames that are used. Now, if we break this, I'll show you the support resistance part of the package. So you can see here, see that dashed green line right there, and the dashed white line there, and the red line. That's going to be the dash. That's also the red line there. This is the prior. These lines will give you, these are automated. So this is on an intraday chart, so it's below a daily. So this will be the prior day's high right there is that green line. The prior day's close is that white line. The prior day's low is that line there. Now, when we have this daily, then this will be the prior week's high, close, low. When we're on a weekly, that will be the prior month's high, low, close, okay? And the course is, set up to show you how to use these tools. All right, so if you look here, sorry, let me put this on weekly. If you have this on weekly, all right, see here's the prior month's high, close, low. These are very important support resistance package tools to use, okay? And then here, this is the 50 simple moving average, it's color coded and slope, so that's part of it, okay? So basically 1, 2, 3, 4, 5 different studies within the core model. I hope this day trade Apple was amazing. So, and I'll show you how we would do that. You know, basically what we just drop it down. We use a 5-minute time. Usually a 5-minute time frame and a 5 and a 2-minute time frame. All right, so just, you know, I can show you, this is not going to be a day trading course, but these tools are definitely what I use for day trading. We used to just trade tons of gold and Apple, you name it. All right, so here's, you know, and so this, what you're going to get also, the other really good tool for day trading is my opening range high-low breakout indicator. So I'll show you that one real quick. It's a great tool for day trading. Let me put that in. Here it is. Let me put this, I'm going to put this on 5-minute, but here's the other tool you'll get. So here's an opening range high-low breakout indicator. So you can see this red line, that's the opening range low from Thursday opening range high. So this is one tool that's really great for day trading. Let me do an additional little adjustment here real quick. So I'll show you going back every day. You can see how it looks. All right, so this is one tool that's really good. So you can see here's the opening range high-low right here. See, I drill down and it broke that opening range low and just really tanked. So this is a tool that actually started using this back in the 90s. We made this tool just for trading crude oil. It's really, we would trade the opening on crude using this tool, and it works really good for, you know, stocks, etc. So anyway, I'll show you how it's used in the course. You know, the opening range high-low breakout indicator. So yeah, definitely something you can use for your day trading. All right, any other questions here? I think that's pretty much it. Hold on. Oh, let's go through the other courses. See this right down here below, right here. Okay, see where my arrow, so this is the, see that top row? That shows you everything in a volatility squeeze. Okay, so it's red. So this is Google. So Google's got a 2-minute squeeze, 3-minute, 4-minute, 5-minute, 15-minute, 20-minute, 2-hour squeeze just trigger. It's got a 4-hour squeeze and a daily squeeze. Then the row below it, everything that's positive momentum is green. Okay, that's a multi-squeeze indicator. Okay, so if I put this on 4-hour, you're going to see this is in a 4-hour squeeze. Get rid of that. All right, so that's what the course is for, to teach all these little ins and outs. Okay, there's a lot that these indicators can do. Right, so you can see it's in a 4-hour squeeze right here and a daily squeeze right there, okay? All right, so you're gonna learn all about how that works, how to do it, how to use it, and then how to set up your price targets using the Fibonacci price target mapping. We're gonna go through that. How to, the automated trend lines, which moving averages I use, how do I use them? We're gonna go through that. This is all about directional trading with these tools. And then what are the best you know, time frames for your short duration swing trades? We're going to spend a good amount of time on these chart patterns, the 5 different chart patterns, you know, how they, you know, what to look for, and then how to incorporate that squeeze with the patterns. This course is all about direction and timing, okay? And then we'll go through this step-by-step process for trading volatility squeeze using that opening range breakout indicator. We're going to go through this 5 black and white rules that we're going to go through that I use for price entry. It's not fuzzy, it's black and white, 5 steps. And this is going to be based on the trading model, reversal indicators, the multi-time frame squeeze momentum indicators. So that's why it's important if you want to if you want to be successful in your trading, you need the right tools, right? If you're whatever your profession is, you need good tools, right? And then we're going to go through the profit take exit rules. So there's a lot that's going to be covered in this course. It's all direction. All your good trades are going to be based on getting direction and timing right. Then part 2, the best trade setups. We'll go through the volatility squeeze breakout, cycle low, reversal, high, low retracement, etc. We're going to go through all that. And then we're going to go through the scanning, how to go about uncovering those next big winners. And so we're going to go through this scanning process that I go through using the volatility scanner plus the momentum crossover scanner. These are where I find all the trades. So if you want to learn how I find the trades, I use these 2 scanners, and we're going to go through it in the course, how they're used. Okay, and then establish a watch list, monitor it, how that's done, and you'll get a trading library and resources. So it's a really extensive, really great course. I'll do this twice a year, so hopefully you won't miss out. And here's just a little feedback from Pam. I've literally lost thousands of dollars in other systems, but settled for Larry's. His technical knowledge is unsurpassed in my opinion, and his knowledge using option strategy, low risk, high reward are the best. From Bruce, Larry's expertise in custom tools provide one of the best, if not best, method for identifying, entering, and managing trades. And the follow-up Q&As and trading room reviews using these methods on current identified trades cement the understanding and confidence of using the trading model. Ronald, best improvement on trading has been the addition of the power cycle trading momentum 1 and 2 indicator. So those are the indicators here, 1 and 2, right down here. They're just great indicators. So been using these for since, like I said, 2000, basically 9. So here's the indicator software review real quick. So here's the dynamic trading model. Now this one is, you can have your choice of any of them except for this one. This one you can only get if you do course package 2 or 4, which has the alerts. So it's a 5 study set trading model that has my volatility squeeze, support resistance package, momentum cycle 1 and 2. It's got one indicator here that I don't use, but it's available for Thinkorswim, TradeStation, TradingView, actually, Ninja Trader, eSignal, okay? So you'll get that, and you can have one or all the different platforms. It doesn't matter. I do have wealth charts, but I can't do the price for that. Then you'll get indicator 2. This is all the indicators you'll get. This is the MoFlow signal trigger. This is where the actual arrows pop up for momentum cycle 1 or 2. So this, you'll get a color-coded arrows. So if you get a cycle 1 goes positive, you can color it whatever you want. So you'll get a green arrow, or cycle 1 goes negative. So that's where the arrows pop up. All right, so it's just a visual part that you're going to get, okay? So it's just a MoFlow, I call it the MoFlow signal trigger indicator. So it just gives you that visual study that you can use for the arrows. So here's cycle 1 going positive, 2, etc. Okay, so you get that. Now this is only available for Thinkorswim. I only have that for Thinkorswim. All the indicators I had were developed originally for Thinkorswim, then I added to them, Now this is a great tool. This is the one I showed you just a minute ago. This is the multi-time frame. This is really a great tool because it shows you every time frame that's in a squeeze on one chart or a momentum. You don't have to pull up different charts. It's there for you. So we'll go through how that's used. Have this for Thinkorswim and TradeStation. So it displays on one chart all the time frames in a volatility squeeze, all the time frames that have triggered, and all the momentum time frames, okay, on one chart. Okay, so this is a really great tool. So you get that, or that could be a choice of, 1 in package 2, or package 1, you get that as a choice. And then you'll get my cycle reversal indicator, super great tool. This one is just, can't trade without this one. course package 2 and 4, this is included, or if you do 1, this is a choice of 1. So this is based on relative strength. It's percentage range bound indicator. It's got an upper and lower study. The upper study shows you the arrow. The lower study is actually the signal. Okay, so TradeStation, Ninja Trader, Trading View. So you get that, or a choice, depending on the package. So if you do package 2 or 4, you get all the indicators, just to make it simple. Here's the extreme range band indicator that I showed you earlier. You'll get that. That's this one here. All right. And in the course, I'll show you how to set these up and then how to use them. Okay, that's what the course is about. So these are the extreme range bands. So this identifies price extremes when the market's starting to get exhausted on buying or selling. This is the first signal that a security is starting to reverse. So it's very accurate in doing that. Available for Thinkorswim, TradeStation, eSignal, Ninja Trader. And here's my opening range high-low breakout indicator for Thinkorswim, TradeStation, eSignal, Ninja Trader, and the volatility scanner. Okay, so this is for Thinkorswim, TradeStation, eSignal, but the Thinkorswim, I'd really try to go with Thinkorswim. It's great. So this is basically where I find all the trades. This and the momentum reversal scanner. All right, so you're going to get all that good stuff. And yeah, here is the link again. Deborah, use this special powercycletrading.com/special, and then use that DIR 15. Okay, so click on that. And so you'll get the price target mapping Fibonacci course. This is a new one that I just finished this in August, but this is how I identify targets for profit take or defense. And so it incorporates Fibonacci, moving averages, support resistance levels, price action, what I call standard deviation forecasting, and unusual option activity. So this course takes you through how that all aligns together to use this target mapping. It's a 3-hour course. And we'll go through parts of this for every trade setup in the course. So I use this on every trade before the trades are ever done, but you're going to get the full-blown course as a bonus here. And then you're going to get in the course my momentum crossover indicator. This is signals a momentum reversal, and it's got an upper and lower study. That you'll learn how to use this and set this up, and also how to scan using the scanner for it. And then you'll get, if you do course package, 1 or the alert service package 3, you'll get a 30-day trial membership to the trading club. So basically, what you're going to get here is access to my virtual trading room from 9:30 to 10:30 Monday through Friday. Come in, ask any questions, see what we're doing as far as trades. I do a video newsletter every day after the close. Members trading video archive. We do a weekly Q&A, live and recorded. And there's a trader's educational vault with good trading information there. And then as a member, you get 60% off on all my courses or software, okay? And I always like to quote this at Jay. He's one of my old members. He said, just wanted to say my option knowledge has leaped exponentially since joining your trading room. Reading books is fine, but seeing the actual option trade setups make a huge difference. And that's from Jay. All right, so that's what you're going to get there. And then you'll get follow-up support Q&A. We'll do that on Wednesday. And you've got the trading room for the next 30 days, or if you do the alert service, you'll have for the next 4 months. And then you're going to get my futures guide. It's 31-page futures guide, trading tutorial if you'd like that. That's a really good thing to show you how futures work, basically. And you'll get a directional tutorial model on my trading system, the Power Cycle trading model. Okay, so all that stuff. And then one final look at review of the alert service. Here's from Dan. He said, you're very diligent and totally thorough with your analysis. And some have IRAs, they can't do these option spreads, so they'll just maybe buy a call or buy a put. But when I send out the trade, I always give a suggested option trade. I'll give you the entry level, profit target levels, what those are based on. I'll try to give you a good trade description when I send it out. I'll give you what option series to use, stop loss levels. Then I'm constantly monitoring the trade all through the day for you, telling you if you need to stop out, need to adjust, take profit, etc. Okay, so I'm constantly monitoring these. And so then I do a video review of it, the trade. After the trade, we set it up that day. I'll do a video on it that night, telling you why, more detail why I did it. And then, like I said, I do have to close it every day during the week. That video newsletter, review all setups, what I'm looking at as far as the market, what's coming up. And then we do a weekly Q&A that's live and recorded every week. And then we have the virtual trading room open every week, 9:30 to 10:30 Eastern. So come in for that, and discounts of 60% off everything. So here's the, we're running about 70% win rate. Here are a few other alert trades that we've done, just to kind of give you a sampling. So with the calendar diagonals, we do a lot of these. So you can see since the 2019 through Friday, we've done 304 calendar diagonals, 220 winners, 17 break even, 67 losers, 78% win rate, again, unaudited on those. But these are trades that we do a lot of for a lot of different reasons. They give us what we call a lot of flexibility. But anyway, they're cool trades. And here's one I showed you earlier, Marvell. Here's another one. This was a really good one that we did on Conoco. This was a short trade. We did this using a put calendar diagonal, which we entered on the 4th of September. It was trading at 109.85, and this thing, we ended up making a huge amount of money on this one. I'll show you real quick, but these are very detailed. When I send out the alert, you can see that it says new Conoco retracement failure short, trading around 109.85, daily negative momentum and momentum downside cross. So these are the tools that you're going to get in the course and how to use them, but I'm describing it here in the alert. So target 1, we're looking for a move to 108, target 2, 106. So this was buying a diagonal 24 September, 6 September, 109, 106, put around $1.65. So very detailed. And so look at that trend down. So this was using the trading model for this. We found this trade off the scanner, okay? And this was based on a momentum crossover right there. I was scanning for that type of trade, and this popped up. And so you can see then we got into the trade right here. Look at this beautiful downtrend. Nailed it all the way down. Momentum cycle 1, 2, cycle reversal, perfect trade. This was a cycle reversal into the 200-day moving average, retracement reversal. So we did this with a put calendar diagonal. And so we did a couple adjustments and had so much profit booked into it, we adjusted it down to actually a credit of $77 credit. So when we took off the balance, we had adjusted this trade to long the 20 September 106, put short the 13 September 101. So I had zero risk, and this trade went from, we were out of this, it was trading at 103.50 from originally 109.85. The trade was up $412 per spread. So that was, one, and that was a cycle high retracement reversal. So all these trades that I sent out on the alerts are based on the tools that I'm going to teach you this Saturday. Here are a couple of other ones. These are the butterfly trades. We do a lot of these as well. So since 2019 through Friday, we've had 192 trades closed out, 137 winners, 13 break even, 42 losers, 78% win rate. These are very low risk, $50 per spread average. When the loss, but big potential for 2-to-1 to 25-to-1 risk reward. So these can be huge winners. I showed you the 2 penny trades that we had on Tesla and GLD, but here's a couple of other ones. This was an Amazon long call butterfly. This is one we just did recently. Set this up on the 15th. It was trading at 186.85, and then took it off the 18th. It was penning right there where we wanted it, 190. So you can see here, it was a cycle low retracement reversal. Another one right here, see this? We've done a couple of different trades on Amazon based on the cycle low retracement. Cycle momentum starting to shift. And we did this as a butterfly, just targeting right there, low risk trade. So we went out, we did on the 15th for the 18th October expiration. We bought the 185 call, sold the 190. 195, call butterfly right there. Okay, We had a risk of $163, and we had a spread of $5 wide spread, 500 less 163, potential profit 337, potential 206% return. So we did this one, had a nice move up, and sometimes these can be much greater, but this just looked really good, so we went in and jumped in it. And so we came close to almost a perfect pin right here, so it went out trading at 190.02, very, very close. So 163 debit cost, now it's up to 453 on the spread, so $290 per spread, 178% return. So this was just recently on that one. And then a couple others, and then we did the NVIDIA. This was a long call Condor, just done recently on the 24th. September trade at 121, exit at 125, so very detailed description there. And again, here it is, the cycle low retracement reversal off. That's the 50 simple moving average. Okay, so same, these trades are always exactly the same. So here's your support, retracement reversal, momentum cycle 1 and 2 are up, cycle reversal there, everything. So